What does Lake Resources, AVZ Minerals, City Chic, Mesoblast, or Unibail Rodamco Westfield all have in common? You might be sitting there looking at this image on the left, thinking to yourself, these are just a range of individual companies all thrown onto one graphic. But actually, there is one discernible link that connects all of them. They've all had a milestone day on the past Friday that actually could be impactful for their share price progression moving forward. In today's video, we're going to discuss what ASX index inclusion means. You might have heard the terms market index or index rebalancing thrown around, but today we're going to really discuss and dissect what these terms mean, and then make sure you stay until the end because we'll explore what this could actually mean for the share price progression moving forward as well. Hope you enjoy this video. For now, sit back, enjoy, and let's get talking about market index rebalancing. So before we discuss some of the specifics and unpack some of those headline ASX 200 and 300 rebalances that happened on this past Friday, it makes sense for us to take that step back and have a think about what are market indexes and why do they attract so much investor interest. So to break it down simply, market indexes are simply a portfolio or a basket of investment holdings that represent a segment of the financial market. You might have heard of some of the leading market index providers like S&P or MSCI. But in fact, market indexes can really be representative of a range of different factors that you would have previously considered. Often they are broken down into two broad buckets, either on market capitalization, so size. You might have heard of the ASX 20 or the ASX 300, or maybe the S&P 500 or the Dow Jones Index. These are done on market capitalization. But there is also different types of breakdowns done by sector. So you may have heard of the NASDAQ, the All Technology Index, or recently one that's been quite topical as well is the GSCI, which is a commodities index tracking commodities. And we all know about the significant excitement surrounding the commodities sector recently. But at their core, indexes are simply a basket of holdings that are used to track and represent a segment of the financial market. Often they can be indicative of the health of the broader market. So the ASX 200 is the benchmark flagship index on the ASX, or the S&P 500 is often seen as representative of the health and the trajectory of the US market. But hopefully that gives you a bit of an insight about what these indexes are. And so with that understanding, index inclusions happen regularly. Of course, these are not just static lists that are put up once and then for the next 50 years these are used and really relied upon. We know that markets, as well as the broader macroeconomic picture, is evolving. It's dynamic, things change, companies grow, and sometimes they also shrink as well. And so as a result of that, new companies that emerge are sometimes added to indexes. Well, of course, also on the opposite side, sometimes companies fall out and are removed from indexes. But there has to be a system for this, and that's what index rebalances are. And so index rebalances happen on timeframes. They normally run to a system and there's a process for them. Some of the flagship indexes on the ASX you might have heard of, like the 20, the 50, the 200, these rebalances happen quarterly, while other index rebalances might happen either yearly or semi-annually. And so of course there's a lot of interest from investors about when index inclusions will be happening and whether their favorite companies may be included into indexes, because there actually presents a range of opportunities if this happens. And so why does inclusion matter? Well, at their core, it really just brings us down to what the markets are. Share prices are simply a function of the supply and demand of the available shares. If demand increases for shares, then of course share prices can rise higher. However, if demand decreases or there's a reduction in demand for the shares, then share prices can go lower as well. And so index inclusion can help to increase demand for the shares. But there's actually a range of different components to this phrase. We know that demand for shares can move higher based on fundamental reasons or sentiment-driven reasons, and index inclusion actually touches on a range of these and plays at the intersection of them. For index rebalances, first and foremost, funds and ETFs provide exposure to underlying indexes. So many of them have ASX 200 tracking indexes, or they have funds that match an underlying index. And so as a result of that, as new companies are added to indexes, these funds provide exposure to the underlying indexes and they buy shares to ensure that investors or people who are trying to get exposure to the shares have exposure to the underlying indices that they're tracking. But on the other side as well, funds often have mandates too, which means maybe they're only able to purchase from companies in the Dow Jones Industrial 30, or maybe they can only purchase companies in the ASX All Ordinaries Index, in the top 500 companies. And so as companies are included into some of these indexes, then mandates open up to them, and it means that they're able to have access to broader capital flows as well. And then also awareness. We know that investors are always searching for new ideas and validation. There are thousands of companies across the world. There's no way you can be across all of them. And so as a result of that, often investors might just look at some of the top lists. I know that many investors may have been looking at the recent 200 or 300 inclusions on the ASX to get an idea about some new companies that may be up and coming or some other companies that might be falling off. And so investors are always searching for ideas and validation, and being included onto these large lists gives you validation for your mission, but also brings more eyeballs to the story as well. And so, of course, that brings us to the discussion surrounding the recent rebalances. As we know, the ASX 200 is the flagship index. It's often viewed as representation of the Australian equity market. If people are like, oh, the market was up by 0.8% today, or the market went down by 1%, often they're referring to the ASX 200 as an indication of this trajectory. Just to give you a bit of an idea about the scale of the 200, in Australia, of course, it moves on the day-to-day depending on share price movements, but the ASX 200 represents about 80% of the total Australian market. And the S&P 500, as an indication as well of the US market, is even higher, with up to around 85% of that US market. And so, of course, inclusion into the ASX 200 is a big deal. It goes some way to legitimizing companies' missions, and of course, it brings a lot of eyes onto their story because this is where a lot of investors, analysts, and funds are paying the most attention to. So for the ASX 200 rebalance over this past period, there were some big inclusions, including City Chic, the e-commerce retailer, AVZ Minerals, who are developing one of the largest lithium resources in the world, and Home Consortium, as well as De Grey Mining. But we do know that when there are inclusions, of course, there must be removals as well. So companies like SkyCity, Spark Infrastructure as well, which was acquired, Unibail Rodamco Westfield, or Mesoblast, all unfortunately found their way falling out of that 200. I'd be very keen to know your thoughts on it all too, so drop in a comment below what you thought about this recent rebalance, whether one of your favourite companies was either rebalanced into an index or might have fallen out, and what do you think this means for company progression moving forward as well. And just a reminder, if you do enjoy the video, don't forget to hit the like button, feel free to share it out, and make sure you've subscribed and turn your bell notifications on as well. And so just having a think about some of the index rebalancing takeaways over this past period. The March rebalance is always a major one. There is a lot of different rebalances, including the annual All Ordinaries rebalance. Of course, we got all of the individual indices as well. So there was a few themes that came out. I think first and foremost, and we saw this coming through in the December rebalance, as well as the September one, and as we know, these are done quarterly. But once again, the EV battery materials space continues to shine. Here are just a couple of the names that were rebalanced either into the ASX 300 or ASX 200, but from Sayona Mining to Lake Resources, Core Lithium, AVZ, Firefinch or Jervois. I'm sure many investors in the EV battery material space are familiar with these names, and it really speaks to the focus on this broader cohort of names as the decarbonisation trend picks up pace, and of course the electric vehicle adoption grows as well. Interestingly too, we saw some of the 2020 winners rebalanced out. We saw that happening in December as well with names like Kogan and Redbubble, but this continued on today with Sezzle, as well as Mesoblast and Block from the larger index too, also were rebalanced out. And so this is interesting, just getting a bit of an idea about the changing transitions or changing priorities from investors. It is worth noting as well that AVZ Minerals were included into both the ASX 200 and 300. It's not often that this happens, and it speaks to the real success and the real scale of AVZ Minerals, as well as the broader lithium sector as well. It's always an exciting day to see your company rebalanced in, particularly for many of these companies that had been through difficult periods, particularly after 17 and 18. And of course, they had battled through and now have continued to scale and are looking forward to this real decade up above with the EV adoption picking up pace. And it is worth noting too that the All Ordinaries rebalance was complete. The All Ordinaries is a top 500 companies. However, differently to some of the other names on the S&P list, which are rebalanced quarterly, the All Ordinaries is only rebalanced once annually in the March quarter. So as a result of that, there is a significant amount of additions into the index, but also a significant amount of removals. If you are interested, there's a list on the ASX website, as well as a range of other websites that you can check out for the full list of companies. It's definitely worth having a look. And of course, it's interesting thinking ahead about what this could mean in terms of implications for share price progression as well as attention. And so that then brings us to the question, what happens next? As we mentioned, funds will look to rebalance their portfolios over the upcoming period, and of course that's already happened previously. It's worth noting that the rebalance doesn't happen on the day of the announcement, happens a couple of weeks after. So as a result of that, there is a bit of a period before it officially takes place, but funds will look to rebalance their portfolios to track the indexes. Additional attention from funds as well as investors will go onto these new names. As you go through the list, maybe there will be a few that you might not have been familiar with, but you might go and add them to your watch list or check them out and have a bit of a search about what these companies do. And this will be happening across the nation too. It is worth noting as well, of course, there's a huge amount of excitement, and most importantly, it brings validation to the companies as they grow further and further, and of course, they get a broader mainstream acceptance as the companies are included into the All Ordinaries and the 300, potentially the 200, and move higher and higher up into established blue chip status. But you shouldn't expect fireworks and parabolic moves on the day of the inclusion. This is more a steady stream. It's validation, it's acceptance, it's a major milestone and a significant tick as well. But what it really is a boost potentially to sentiment in the short term and momentum, but really it is more of a seat at the table, and it brings a lot of eyes onto the mission. And so it's much more of a longer term achievement, but it definitely is exciting. And of course, as mentioned, many investors look forward to the milestone announcements of the rebalances, because each quarter it can be a really big opportunity to see how your companies are progressing, of course, over time. And so with that, it's been a milestone day. I'm keen to know your thoughts, so drop in a comment. We'll definitely be looking forward to seeing how some of these companies trade moving forward into the official date of the rebalancing coming into action moving forward. Hope you enjoyed this video. Thank you so much for joining us. We'll leave links up above to some of our other videos as well. For now, stay well and happy investing.